Alrighty, hello and welcome to another video. So, today I'm going to give you 3 ways to manage risk like a pro. Now, is this exactly how the pros do it? Maybe, maybe not. But this is 3 ways that I believe are very, very good for managing risk. All of these approaches I've actually tried, and I've now landed on my favorite approach to managing risk, which I'll show you right at the end. So I'm going to start here with number 1, trailing stop loss. Trailing stop loss behind candles. So this is a technique which is actually pretty good, but it is quite an aggressive approach, right? I think this approach of trailing your stop loss behind each candle is suited best for some breakout strategies, maybe some lower time frame kind of scalping strategies, etc. And less suited to my main model of swing trading. But it's an entirely solid approach. So I'll give you an example in the chart. So we're here on Euro USD 4-hour time frame. And I'm going to show you a trade that I actually looked at getting in. So there was a trade right in here that I was looking at getting in. So when price was right here, so we were right in this area here, I looked to short right off the entry in here. And I actually got in the trade. And it went pretty nicely in profit and then came back up and stopped me out around break even, I believe. So I got in with the kind of like in here with some confirmations, had my stop loss up here and targeted like way down. And ultimately it came up, stopped me out, right? So if I was in this trade and I trailed my stop loss behind the candles, I would have done the following. I would have just consistently moved. So say I got my entry on this candle, I would have straight away put my stop loss here, shifted it there, then shifted my stop loss behind this candle, and just kept doing that all the way down, and then ultimately would have got stopped out. As you can see, would have got stopped out right there. And that was a tiny wick, so that may not have even stopped you out, but 100% would have got stopped out on this candle, right? So basically you can see the approach. You're taking your entry and then you're just shifting the stop loss, shifting the stop loss, shifting the stop loss. Now, if you are going to take this approach, I think you have to be quite realistic, right? So what I mean by being, why isn't it deleting? All right, it's not deleting, but you got to be quite realistic with this approach. If your entries are, not based off of candle confirmations, I don't really see how this approach would make much sense. For example, let's say I was buying on retest and I would buy as soon as price came in here, right at this level, have my stop loss up at the top. Trailing stop loss is basically setting you up for getting stopped out, right? Because you've got a wide stop loss, you're going to get stopped out pretty easily, in my opinion. So I would take this approach more so if I was going to be entering in with tight stop losses and I want to quickly shift my stop loss behind the candles, etc. So that's just my 2 cents on that approach. However, a pretty solid approach nonetheless. Okay, now the second approach I'm going to talk to you about is also a pretty good approach, which is number 2, stop loss to break even at 1, 2, 1, right? Now, the number you pick to move your stop loss to break even is up to you, right? You got to figure it out. So again, let's say I take some sort of trade. Let's just do some recent price action. Let's say I take a short up here, right? Again, this is completely random trades. And well, actually, I'll do another example. Let's say I'll do the same trade. So I take a trade right here. My stop loss is above this candle. and I'm targeting down at the low, right? It's the exact same trade, so I'm targeting down at the low. Now, as soon as price comes to my 1-to-1 level, which is right in about here, it hits my 1-to-1 level, great, my stop loss is going to break even. Now you can see in this trade, I would have been stopped out for a break even trade, okay? But again, this is just one trade example, so we can't really gain much insight from one single trade. So I enter in, stop loss there, hits 1-to-1, stop loss to break even. And essentially what this does is it kind of reduces, it's a quick way to reduce the risk on each trade, right? So it's most likely with your system going to reduce the overall drawdown of your system. However, it's also going to take away some trades that would have been winners. So it's kind of a balancing act, right? Now this is a system that I think is pretty good, and you can also adjust when you move stop loss to break even. I would say minimum at a 1-to-1. You don't want to be doing it at like 0.5 R, etc. I would say only go to break even at around a 1-to-1. And you could also do it 1-to-2. It all depends on the risk to reward of your system. Again, these are just ideas. You got to fit them to your system, to your actual approach, and kind of go from there. And finally, the third approach is the approach that I use. So obviously, I wouldn't say it's my favorite approach because I don't have a favorite approach. It's whatever approach is most profitable is the approach I'm going to use. And on my swing trading system, I found the best approach is stop loss behind, or let me say at swing points. So you adjust your stop loss based off of the major swing points. And every time a swing high comes in or a swing low. So the reason I like this approach from my swing trading system is because it is a slightly higher time frame swing trade approach. I'm looking for price to go through various waves of market structure to my trade. I'm not looking for a quick scalp or one candle in my direction. No, I'm looking for a trend essentially in my direction. So with that, moving my stop loss behind swing points is logical and also the most profitable. It reduces my overall drawdown of my system, and yeah, it's just overall the best approach. So on this Euro USD example, again, I'll go with the exact same trade. Actually, this trade isn't going to have, it's just going to get stopped out, right? You can see there is no swing point made. It just went down, came back up. But let's say I've actually got a trade that I think will be quite good here. A trade that I'm currently in on gold, right? So this trade, I took this trade here, and I'll go into the 1 hour so it's more clear. So I took this trade here on gold, where I'm overall, because of the strong US dollar, I'm overall bearish on gold for the time being. And I'm targeting these lows right over here. Now you can see price came and swept this high, and that was my trigger to go short. So as soon as it broke this high and started to kind of react away from this level, right in here like that, I took a short entry, stop loss, quite wide stop loss as you can see above the high. That's the way I like to do my trades, and target the bottom of the range. Now you can see how price has created multiple swings during this trade. You can see the market structure on this trade, right? Bang, 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 bang. Okay, so rather than just keeping my stop loss up here, what I did is I shifted my stop loss during the trade. So I shifted it to this level, and then we came down. No shift here because this is a minor swing point. Waited for price to then create a swing high and then broke structure. So great, this shifts to a new swing point. Now again, if price here snaps down, I'm going to adjust my stop loss once more in behind here. And essentially what this does is allows me to lock in some profits. So I've locked in, okay, 0.2 R. Next, hopefully 0.36 R, right? It allows me to quickly reduce the overall trade risk, which was originally at 160 pips, down to 35 pips, then into profit, right? So yeah, that is the approach that I take. I think it suits my strategy perfectly. And again, if price the other option I could, which is something I'm actually looking at, I'm testing at the moment, is what happens if I just don't even set a fixed TP? And instead, I just continuously shift my stop loss between the highs, the swing points, until I get stopped out. So yeah, that is the third and final approach, the approach that I opt for in my trading system. So yeah, these are just 3 ideas. Now, before I finish this video off, I want to make an important point. These are 3 ideas, 3 ways to manage risk in your trades. They're just ideas, okay? You need to now take these ideas, apply them to your system, make them rule-based, right? Just as I have with my system, and actually go and backtest it on your trading system. Because what works for my system might not work for yours, right? So you need to take these ideas, go through historical chart data, and actually backtest and see what is the optimal approach for your strategy, and then start to act on that in real life trading, right? So that is what you need to do. So yes, take these ideas, but don't just go with them. Don't just be an unprofessional trader. No, take them, backtest them, and essentially let the data make your decisions for you. So that's that for that video. I hope you found this useful. Give a like, subscribe for more content like this. I'm gonna be doing daily videos just like this. Trade breakdowns, fundamental breakdowns, trading tips, the whole lot. So follow along if you're interested. Thank you very much for watching.